Well, in Finstreet today, let's talk about deposits. There has been worries about deposit growth in the banking sector. Is it really that worrisome? The answer is no. Banks have been aggressive with their lending, which has now got to a point that they need further more deposits to keep up with the pace of growth. So hence, RBI has also put in a request with the lenders to curtail their credit deposit ratio to 75% for all those who have the CD ratio or credit deposit ratio above 75%. Let's understand in detail that the deposit growth in the banking sector over the last few fortnights on a YY basis has been pretty robust. In fact, for the last fortnight data as of RBI that gives out deposit growth X of SDFC Limited is at 12.5% YOY. For the longest time over the last 7 years or more, deposit growth has been in single digits as well. Now, deposit to M3 ratio X of SDFC Limited is at 81.65% as of 23rd Feb 2024. It's on the higher side that you see over the last 1 or 2 years. So why the hue and cry on deposits being heard everywhere? Loan growth is pretty robust. X of SDFC credit growth of the banking sector continues to outpace deposit growth. So X of SDFC Limited credit growth of the banking sector was at 16.5% YOY with CD ratio being at 78%. Overall, including SDFC Limited numbers, credit growth of the banking system was at 20.4% YOY with CD ratio north of 80%. The last time system deposit growth outpaced the loan growth was on 8th of April 2022 when the CD ratio was below 71.5%. Can deposit get a booster in the near term? The answer is yes. Currently, household money has various alternatives like stock market, etc. to invest. Hence, deposit flow has slightly been impacted from the same. Example, take a look at money flow into mutual funds. It has seen a CAGR of 30% plus in last few years. Now, government spending expected to happen in March 2024 of around rupees 1.8 to rupees 2 lakh crore can boost deposits. RBI has been cautious as well. Hence, liquidity has been very tight. Post-government expenses coming back into the system, if RBI starts to ease liquidity conditions, deposit momentum can pick up. In terms of outlook, unsecured loans can see some slowdown due to RBI cautioning the lenders on the same. July or August will be the litmus test for the banking sector with respect to deposit flows. RBI's directive to trim the credit deposit ratio to 75% can impact the loan growth. You can expect the net interest margin and return ratios to come back to historical high averages, especially for private banks to around 4% net interest margin and 2% ROA versus the highs that they are recording right now, that is about 4.5% net interest margin and between 2.25% to 2.5% kind of an ROA level.